The first rates then this Thursday morning, and they've started off on a rather tempered note. The Nifty starts off absolutely flat, just circling around that 19,650 print. Similar is the move on the Sensex as well, 97 odd points lower, and relative outperformance at best for the broader end of the market. Both the mid and the small cap NBCs as well have started off absolutely flat, with just a smidge of a positive bias. Flat for the Nifty Bank as well. Let's start off with Bajaj Finance. First, that's the big news maker that could have a bearing on the way the Nifty actually pans out today. It's really not that bad. You know, about a 2.6% is the dip that you're seeing on Bajaj Finance. I mean, one would have thought that it's going to be a bigger knee-jerk reaction perhaps, and maybe this dip as well gets bought into. That remains to be seen. It's still clinging on as of now to that 7,000 mark, 7,028 on Bajaj Finance as we speak right now. The other stocks in focus, like we earlier highlighted, TCS with that buyback record date, Tata Motors, you've got the Tata Tech IPO price pan out, there's Star Health, there's BST Tillers, there's RateGain as well with that QIP announcement. So all these stocks are under focus this morning. There's also ONGC, Dabur, Vedanta, Suzlon. You may want to look out for all of these stocks, as also Paytm, which is now partnered with the travel tech company Amadeus for an AI integration experience when it comes to travel. So that's another stock which is in focus, but you're not really seeing any enthusiasm for this particular stock right now.
Oh, well, yes. In the meantime, just wanted to flag out some of the smaller cap companies. Butterfly Gandhamati is, I think, up around 10%. The volumes are pretty low, but just take a look at that stock. You also have, PTCIL, EMIL. EMIL is actually for the second day on the trot gaining higher. So that stock is up. On the losing side, watch out for RateGain. That QIP is happening at quite a bit of discount to the current market price. So that stock is coming under pressure, and Veranda is giving up the gains that we saw yesterday, so taking a bit of a tumble. Tumble is also as far as Motilal is concerned, so there's a cut of almost 2%, and the other ancillaries of stock markets, the likes of CDSL, Angel One, all of these are actually seeing some profit booking. So this entire space of the ancillaries of the stock markets is actually seeing a bit of a trim, and trim is also visible on Kalyan Jewellers, down about 1.3%, but on the gaining side, it's Glaxo, which is up 5%. Mapma India continues its up move with 4% gains. KRBL and Manappuram are the other stocks that really stand out.
All right, let's find out what the first trades are from our chartists, as we're sort of languishing in trade today. It's in a bit of a limbo, rather, is the word to describe the markets. Kunal, would you agree? And what would be your first trade?
Yeah, so I think a soft start is what I would expect for the what we're seeing for the indices. But then I think if the action is more vibrant towards the mid caps and large caps, I think the markets would probably be busy there. Larger cap names, Reliance is something which I would be bullish on after yesterday's move, specifically the stock breaking past about that 2350 barrier on the futures level. I think would be an attractive trade from a near-term play.
Okay, there you have it. That's Reliance Industries as the first trade. Nooresh, what are you punching in?
So continue to like Container Corp. The stock is setting up for a short-term breakout. Could head up towards 800 in the short term.
Okay, that's the take coming in. Reliance as West Concord, that seem to be the preferred bets right now. It's a more tempered start to the day-to-day. But let's welcome on board Vinit Sambre and find out where is it that he's seeing any excitement in the market. Vinit, hi, morning. Good to have you on ET Now as always. Vinit, a lot of conjecture out there on, whether or not the mid and the small caps have peaked out for the year already. What is it that you believe? Because, for the amount of naysayers out there, there's a fair amount of resilience out there in these pockets.
Hi, good morning. I think, even my thoughts, we have been proven wrong in a way. So I was believing that as the mid and small caps were rallying at some point, we felt that they have peaked out, but I think the rally continues. I think to a large extent there are two important factors which to me seems to be playing out. One, anyways, I think some of these companies, they have been showing decent performance. Companies have been looking at margin expansion across a few of the segments which we are tracking. In terms of the growth, I think the segments which are linked to the broader capex side of the story, those are showing good growth. And anyways, I think the narratives is very strong given the factor that as we look towards the economic upcycle over the next few years, some of these companies are going to grow meaningfully from maybe $1 to $3 billion at what they are in terms of their business revenues. They could move to maybe 30-40% higher from where they are. So I think those excitement and the second most important factor is the liquidity which has been driving. I have been saying that this has been principally driven by the liquidity. When we look at the earnings growth and we look at the stock price performance, the P re-rating has played a much higher role in terms of the stock price performance. So I think to some extent one will have to take a call on liquidity as well. And till now we don't see liquidity easing out. There is enough amount of interest which is there in the small and mid caps. The segment is receiving a good amount of flows. And hence, I believe that maybe the downsides could be protected. The sector may see some consolidation. The segment could see some consolidation. But on the whole, the smaller dips will be bought into is what my sense is as far as the mid and small caps are concerned.
So, Vinit, I mean, considering there's a large pool when it comes to the mid and small caps, where is it that you find pockets of froth and exuberance, and where is it that you still think there is opportunity and value on the table?
Yeah, I think again it's slightly difficult, and we have tried to slice and dice the whole segments as per our our own the way we define these businesses. So I think in terms of the valuations being pretty rich as compared to the historical past, clearly the engineering, capital goods, those businesses have seen valuations rise way too higher than maybe the next 1 or 2 years of fundamentals. They are pricing in stronger growth continuing or sustaining for the next maybe 4-5 years. And assuming that the country goes through the economic upturn, we have strong policies, we have the capex momentum sustaining. I think these valuations could sustain. Otherwise, if there are any risk to those, then I think these valuations could also see some bit of easing out. So I think clearly this is one pocket which is really showing up in terms of being most expensive. And I think largely that has been the driver of outperformance in a big way. When it comes to the second category, consumer discretionary as a category, while it is expensive, but it has always remained expensive. It is not that this is a new high which these companies are trading at. The businesses are seeing some amount of slowness because of the overall consumption being slow largely, but still the valuations have not seen correction as much as the businesses have slowed. So I would say to some extent we are seeing the valuations there slightly on the higher side. While saying that, I would still say that consumption is one pocket which we are watching closely, and maybe at reasonable valuations we would be open to sort of look at taking exposure in some of these companies, because we are believer of long-term consumer trends as far as Indian markets are concerned. So I think clearly these two pockets are the pockets where we find the valuations to be slightly frothy. And then there are pockets like pharmaceutical companies, insurance companies, NBFCs, banking. These are the pockets which are still maybe reasonable or trading at less than their average valuations. So we are trying to create a sort of balance in the portfolio by having mix of both these categories, but being trying to be more rational in terms of our approach when it comes to sizing these businesses in our portfolios.
Hi, this is Anish also joining in the conversation. What about pharma? What within pharma looks good to you?
So I think clearly, sorry. So I think clearly when we think of pharma as a sector, we are looking at pharmaceutical companies. Hospitals are also part of the overall healthcare as a basket. While hospitals in general they have been doing well, but the valuations there are they are almost full there. But in terms of pharmaceutical companies, I would say that these companies are now seeing margin expansion driving their earnings growth after last 2-3 years of maybe mediocre performance. The valuations have still not caught up to the expectation changing in terms of the earnings. And broadly, I would say that companies which are catering to both the Indian domestic market and the international markets are the ones which we are sort of focusing on as far as the pharmaceutical companies are concerned.
Vinit, hi, morning. Let's also get in your take on how you'd look to really capitalize on the opportunity within the entire defense space, railways, PSUs as a theme that have really had a stellar run-up so far. Do you think that there is more to go, or do you think that already the run-up has been too fast, too furious?
No, as I said, I think these are the segments which have definitely seen very positive change in the fundamentals when it comes to order inflows, when it comes to the growth in the business, or when we in general think of the opportunities which are maybe there in terms of the plans which the government has across all these categories which you mentioned: defense, railways, power. So I think all of these categories and we have seen a massive amount of stock outperformance over the last maybe year and a half. So when as we stand today, I think as I said in my initial remarks, the sustenance of these higher valuations would largely depend upon the fact that these companies continue to get the momentum as far as the orders are concerned, and which we as of now are sort of having that expectation that this should continue. Maybe we could have some blip towards as we are approaching elections, and basically beyond elections, I think once again maybe we have a stability in the government, and then I think these order momentum should continue. So I think we are looking past this next 1 year as far as these businesses are concerned. But let me also highlight that any kind of risk which maybe comes about because of any of these macro factors which leads to slowdown in the order momentum, I think that those are the risks which anyways are there. But otherwise, for me, I think these are the businesses which we are having exposure in our portfolios and will continue to own as of now.
Vinit, what about the entire consumption theme? I mean, the auto index has hit a record high today. The Nifty Realty Index has been on a 15-year high. The luxury, spends have been doing well. How should one play the consumption theme?
So clearly, I think consumption, again, I would like to break it up into two parts. One, the consumption, which is principally more oriented towards the rural side of the economy, or as we say, the entry level products. Those are still not caught up in terms of the growth prospects, because I think we are seeing that the population there has been affected because of inflation, and they are not coming out and fully sort of spending as far as the consumption is concerned. So I think that is something which we believe that over the next 1 or 2 quarters, things should change as some of these inflationary pressures even out, and as time passes, I think people get adjusted to the new price points. And anyways, I think as we have seen improvement in the MSPs and the government spending, which is likely to take place, I think those should help recovery as far as the rural side is concerned. So I think that is that is one category which we have been in anticipation of recovery. We have a sort of, let's say, positive view, because the valuations there are also reasonable across the companies which are catering to those part of the consumption. Coming to the urban side of the consumption, or the premium end of the consumption, we have seen the top, let's say, retail mall, which is in a way, it showcases how the trends there. We are seeing that the consumption there has been decent, and in terms of the valuations, I think these companies are trading at decent valuations. So I would say, and then there are categories which are seeing slowdown in consumption, like QSR and maybe some of the other discretionary categories, but there the valuations are not cheap. So I think we have to create baskets of consumption where we find valuations are reasonable, and maybe there is some expectation of pickup, and those are where we are focusing on. As far as your question on auto is concerned, we have been positive on the auto sector because of the cyclical recovery, which we believe should sustain over the next 1 or 2 years, after the sector has gone through slowdown during the COVID and a year after that. So I think that's how we are trying to sort of think about the overall consumption as a basket.
Vinit, good to have you on board. Thank you for sharing with us your market insights. We'll slip into a very quick break, but don't go anywhere. On the other side, we find out if India's bull run is here to sustain over the long run. Mark Mobius, partner at Mobius Capital Partners, joins in just a bit. Welcome back. Still tuned into First Trades, and let's welcome on board then Mark Mobius, partner at Mobius Capital Partners, who joins us on the show. Mark, good to have you on board. I'd say after a Dhimaka Diwali, you think that the markets are all set for a Merry Christmas. What's the outlook on where India currently stands?
Well, I think that's correct. I think we're going to have a good Christmas. But you must remember, in a bull market, there always are corrections. So you have to be ready for those corrections. But at the end of the day, India's in such good shape, such great companies. There's no question that things will continue the way they are and the market will go higher in the long run with corrections along the way. I'm now in Goa, but I've been to 6 Indian cities in the last 4 weeks, and it's been quite revealing to me as to how great the infrastructure building is going on and the incredible vitality of this nation. I think India is going to go from strength to strength.
Sure, Mark. Hi, this is Anish also joining the conversation. Just wanted to get a sense from you. Does India then stack up as your best trade right now?
Yes, well, you've seen the companies that we have now, and those are the ones that we're holding on to, and they're in good shape. And I think going forward, you'll see a lot of other good companies coming in. It's really interesting that in India, the number of companies with a high return on capital is quite remarkable compared to other countries, which speaks well for the entrepreneurial spirit here in India and also the diligence of the management of companies here in India.
So the last time I remember, Mark, the list of your portfolio included APL Apollo Tubes, Metropolis, Dreamfolk, C Infosystems, Persistent. Anything that you've added, subtracted?
No, actually, the only one we've added would be Dreamfolks. As you know, if you fly at all, you know that all of the lounges are completely packed, and Dreamfolks is involved in that, but you have that on your list.
Yes, indeed. We do have that on our list among some of the others as well, including the likes of a Persistent System. So just wanted to get in your thoughts on how things have been shaping up within the IT space, because it would seem that when it comes to the earnings, a growth for some of the large cap IT names, it wasn't quite as promising. What have you made of the earnings gone by within the IT space, and what is it that you're expecting in terms of performance from IT?
Well, IT generally is going to go stronger in India because of the greater and greater need for the US and Europe and other countries around the world for diversification away from China. Of course, India already is so strong in the software business, so that will continue. But I think the hardware is where India will begin to shine. So it's going to be very interesting to see how many companies in the hardware sector, that is semiconductor hardware sector, are listed in India. Not yet, but it's going to come, and that will be very interesting.
A lot of chatter around here in India as to how, with the upcoming elections in 2024 and the currently ongoing state elections, there could be a big fillip to the capex theme. When you were last here in India, in Mumbai, you must have already seen the level of infrastructure and development which is currently taking place. Just wanted to understand whether this is a theme that interests you.
Yes, but generally speaking, we found around the world, not only in India, but in other countries around the world, the construction sector is very difficult. There are lots of uneventful kind of things that take place that in the construction sector, which is not predictable, let's put it that way. So we prefer to stay away from the construction sector generally, except for companies that do supplies for the construction sector. And Apollo Tubes would be a good example of that.
The other thing, or rather the other tectonic shift which is currently taking place world over is the move towards cleaner and greener fuel. Anything within the energy transition sector within India, which is still at a very, very small and nascent stage, that you like, or at least keeping your eyes closed on?
Well, as you know, the whole area of new energy, whether it be solar, whether it be wind, is growing globally and has become very diversified around the world. The problem is that with the Chinese competition driving down prices in solar and also even in wind, it's become more and more difficult for people to make a lot of money in that sector and to maintain high profitability. So you have that in addition to the fact of government regulation. When you have government regulation, of course, then you've got problems. It's nice if you want a steady dividend income, that may work, but we want growth in the actual share prices. So we prefer to stay away from this whole area of power.
You said India remains one of the top markets, one of the fastest growing economies, but the FII flows have been missing. In fact, we have been seeing consistent outflows this year. What do you think is the impediment for the foreign flows to come into India? Are there other markets which are attractive? Is valuation something that keeps them away, or they're just waiting for this election overhang to go away? Your sense?
Well, it's all about interest rates. You must remember at 5%, if somebody can put their money in the bank and get 5%, it's difficult to put more money into India or, for that matter, any other market. So there's a great sucking sound that's taking place around the world. And of course, there's also a retreat to the dollar. The US dollar is so strong against currencies around the world. But this is temporary. I don't think this will last. Interest rates will come down eventually, and you'll see money coming back in.
Also, Mark, have to get a perspective in considering the correlation of world equity markets, not just India, with what's happening with the yield. Since what you just said about, interest rates, you think 4.5 to what the US 10-year yield has now settled in at could very well be the new normal? Do you see some stability kicking in there?
I think interest rates will eventually come down along with inflation. As you know, inflation is coming down. And as I said in the past, we saw that coming because money supply has come down dramatically. So that combined with the general growth in India will mean that money will continue to come in to India. There'll be respites like we've seen recently where interest rates are too high and draw money out. But generally speaking, you'll see money come back in to India.
And in fact, Mark, wanted to get a sense from you. Globally, what's the best tactical trade right now in terms of portfolio, in terms of various asset classes, various countries? What would you call the best tactical trade right now?
Right now, of course, with the interest rates where they are now, it would be a good idea for investors to put money into the bank and get that high rate of return, but keep at least half of their assets into equities. And I always recommend that, of course, India's, in my view, the best, if not one of the best markets in which to be invested, but you have to be globally diversified. So you might want to put money into Taiwan, into other markets around the world where we see very good value.
It is intriguing, Mark, because I was just going at the geographical breakdown as to what is it that you like most. And it's Taiwan which is actually topping the list right now with a slide over 22% exposure. It's next India and then South Korea. I'm guessing if it's Taiwan, it's the entire tech semiconductor play which interests you. And you think that's that one key commodity to bet on.
Yeah, well, that's right. The semiconductor industry is going from strength to strength, as you know. China is now branching out to compete with the US. And Taiwan is a big supplier. A lot of people don't realize this, a big supplier to China. China and India have, of course, semiconductor requirements, the biggest countries in the world. And Taiwan is a big source of these components. So going forward, I think Taiwan will continue to be very strong. And of course, as we get into AI, the demand for very sophisticated semiconductors will increase, not decrease.
Interesting. The other thing also is that there's China and US, and your exposure there is pretty much neck and neck, barring a few odd percentage points here or there. What makes you bullish on a comeback from China?
I think it will take quite some time for China to come back. Of course, this meeting that Xi had with Biden may help a little bit, but I don't think it will be really the turning point for the Chinese market. There's so many barriers and problems that the Chinese market is now facing, particularly the government in China putting more and more pressure on the private sector. So that is not a good sign for the market. So I would say to people, if they want exposure to China, go to Taiwan, because Taiwan, as I said, is a big trading relationship with China, and you can get exposure to China that way.
Mark, you were alluding to the fact that AI, etc., is very critical when it comes to semiconductors. And given the exposure to tech as a whole, how important do you think it is to really leverage all of these new technologies and stay up to speed? A lot of new age tech companies seem to be doing that. And a lot of large cap IT companies as well are clearly investing and focusing on AI and these new developing technologies.
There's no question that AI is a game changer. Must remember, a lot of people think something magical about AI. It's not magical. It's about speed. What you're doing basically is speeding up computer power. And that's the reason why I mentioned semiconductors coming out of Taiwan and being so important, because those are the higher end semiconductors in the world. So with AI, you have a very, very fast calculation system, which enables you to make analyses that you, at the speed that you were not able to make previously.
Mark, one space which seems to be a consensus buy with at least the domestic institutional investors is the banking space. They believe that, given the underperformance, that's likely to do better, and the entire credit growth in the system, because of the entire capex and manufacturing theme you talked about, and even consumption, is likely to get a fillip. Are you looking at the financial space in India positively? Are you tracking any names closely?
Generally speaking, we don't like the banking sector. And the reason is that the transparency is not there. It's very, very difficult to understand what's happening behind the scenes, because you can't go into a bank and say, give me a list of all your lenders and your depositors with the amount of money you have lent and the amount of money you have coming in. This is just not available. They will give you the gross numbers, but you don't know which one of those lenders will be defaulting. So we found, generally speaking, that very difficult to go into the financial sector for that reason.
Sure. And within consumption, is there a basket that you like here in India? Autos, for instance, the consumer durable plays, or the entire luxury segment as well?
I think in the consumption area, food consumption, of course, is very, very critical in India. And as people get wealthier, which they're doing in India, they will move up the chain. They will begin to buy more sophisticated food products and services. So you're seeing the likes of Starbucks and other fast food organizations coming into India, because they realize that Indians now have the money to consume these services. So I would say best to look at the higher end spectrum in the food sector, and particularly in those food sectors that are using technology for service, whether it be delivery, whether it be services within restaurants, etc.
I was just going to probe a little bit more about that, Mark, since you did talk about food. Outside of food as well, this whole upscaling, premiumization trend has been at play. I mean, whether it be real estate, whether it be shoes, whether it be clothing, cars, across the spectrum. Whereas rural India still is not really showing up the numbers. Outside of the food tech platforms that you just talked about, anything other than that within the entire premiumization or upscaling segment or theme that you like?
Well, you must remember the big trend taking place now in India is urbanization. In other words, although 70% of the population is in the rural areas, this will change dramatically over the next decades. More and more people are moving into the cities. There'll be fewer and fewer people in the farms. Farms will probably get larger and more efficient. So this is a trend, which means businesses will change dramatically. then there'll be terrific opportunities in the transportation sector. There'll be great opportunities in the housing sector, etc. Now, of course, I'm not saying we will invest in those sectors, but I'm saying that those sectors that serve the transportation and housing sector could be very interesting to look at.
Mark, tactically, one can't wish away the big event. That's the election event, which is going to be a big overhang, I guess, on the sentiment of the equity markets. What should investors do around such a big thing like general elections, which are going to be in 2024 here in India?
I think it's pretty certain that Modi will be re-elected. So most of investors, I believe, have assumed that to be the case, and it'll be business as usual. So the questions about the Indian election are probably not as complicated as the situation in the US, where it's a little bit more uncertain, let's put it that way. So I would say that it's business as usual and life will go on with Modi in charge.
But Mark, you've made the tough decision of stepping back from the Mobius Capital Partners. What are you going to do now? Spend your time by writing books, traveling around?
I have a whole list of new enterprises on the back burner. So there are a lot of things I'll be doing in the future that will be very, very interesting, I believe.
You will be back here in India. Sunday, we've got the World Cup final in Ahmedabad in Gujarat, and India's made it to the semi-finals.
Well, I'd love to come back for that. As I said, I've been to 6 cities around India in the last month, and it's been a fantastic experience. It really has been very impressive to see the incredible growth that you see here and the tremendous creativity that you see in India, which is very impressive.
Mark, but if I had to ask you, out of the decades of experience that you have, if you had to give the investors one sage advice, what would that be?
Study, study, study. Read, read, read. Learn as much as you can. Travel as much as you can. And open your eyes to the opportunities that you see around you. So it's very important to be open-minded and to continue to study.
So in your years of experience, learning, traveling, reading, Mark, anything that you wish you did differently?
I can't think of anything I wish to do differently. Maybe study a little bit more than I have. But other than that, it's been a great opportunity for me to be in emerging markets, and I continue to be very excited about it.
Okay, Mark, on that note, we let you go. Appreciate you joining us on the show, and all the best for all of those new ventures. We are waiting back to hear what they're about and what next for Mark Mobius. But thank you so much for making time and speaking with ET Now.
Thank you.
Okay, so that was some sage advice coming in from Mark Mobius talking about the Indian markets. Not that, not that positive on financials, but consumption is one theme that he likes, of course. And he has a plethora of Indian stocks which he has in his portfolio as well. But with that, slipping into a very short break, don't go anywhere.
घर आपको बहुत बढ़िया है।
थैंक यू।
रेंट भी ठीक है, पर टॉयलेट का वास्तु जो है ना,
इम्पॉसिबल। बेटे वास्तु तो ठीक ही।
इसलिए housing.com का हाउसिंग असिस्ट फॉर वेरीफाइड प्राइस मैच एंड रेडी टेनेंट्स। housing.com, पोस्ट योर प्रॉपर्टी नाउ।
With first trades right here on ET Now, let's just revisit what the first trades have settled in at, considering it was a bit of a quiet start after that big bump up yesterday. But guess what? We're back at that 19,700 level. On that note, I also want to revisit what Bajaj Finance would be up to after the dip down in the stock price post the RBI, blockages on some of their e-com as well as the EMI card businesses. Meaningful recovery in Bajaj Finance, almost, halved its losses from where it started off. We're now back at 7,100 on Bajaj Finance. Let's also pull up this chart price of Glenmark and how that has been doing after its numbers. In fact, we've got the management as well joining in on the show, Mr. V.S. Money, the ED and Global Chief Financial Officer joining in on the show right now. Mr. Money, good morning. Great to have you on ET now. Wanted to address the US sales first. The decline of 9% and, a significant slip below that $100 million mark. Did you anticipate that? And what's the reason perhaps for this?
So let me first start with the US.
Sure.
So obviously, as you know, some of our plants have had, there are remediation going on in some of our plants. So there were some supply disruptions, and due to that, obviously the sales have come out a little bit lower. But again, now the remediation work, most of it is almost done. So I think the supplies have resumed in the current quarter. So we see some improvement on account of that. Besides, we also have in-licensed some injectable products as well as this product Verniclean. And I think with these, we should be in a better position to sort of see a much better quarter in the quarter 3 as well as quarter 4.
You say better performance. Would you think the sales would actually turn green? The US sales in particular in the next quarter itself?
Yeah, I think so. We should be closer to the 100 million mark. So I think the previous quarter we were very close to it. But as I just said, that in the current quarter we had some supply disruptions, and that happens when you have a lot of remediation work going on. So therefore, I think we should see improvement.
100 million mark is what we expect to hit in the next quarter as far as US sales is concerned. But you talked about the supply side issues. What about the demand side? And I'm talking about the pricing specifically. We have heard a very different commentary in terms of how pricing is shaping up in the US market. What's been your assessment, and how do you expect the next 6 months to pan out?
So we have, obviously in the past it used to be pretty, the price declines used to be quite high, but I think in the last few quarters we have seen it come to more of mid-single digits. So I think going forward, that's something that's more stable, and we believe that should be the situation for some time. So I think pricing is much better today than, at least the decline is much better than what it used to be in the past.
So the decline has been arrested, but the margins for the first half of the year still remain sub 15%. But I think you have maintained the guidance that you're looking at hitting that 19% mark. How do you plan to achieve that, and how soon?
So, obviously, I would like to clarify that we had given a guidance on an overall business that was including our Glenmark Life Sciences as well, that we would be closer to the 19% mark. So, actually, when you take all of it together, we're still at, in this quarter also, we're at about 18.75%. So, obviously, we're very close to the 19% mark. But what I would like to say that this is the year where we are obviously, in this quarter, we'll be recognizing mostly the Glenmark Life Sciences divestment. And we look at this year as a transition year. And for the year 24-25, we are looking at least a 2 percentage point improvement due to reduction in the R&D spend, especially on the innovative side. Besides, we also see improvement due to margin improvement due to higher sales of Narrates, that is our global brand. Also, we see some margin expansion because of the leverage kicking in our Europe and LATAM markets, where obviously we have had very good growth. And besides that, as Monroe will start commercial supplies, we should see some improvement there. So that's the trajectory we are looking at. So we're looking at this quarter, all in all, sort of taking out the losses of currency. We were at about 15 3/4 without GLS. So we have a pretty good glide path to going towards closer to 19%.
The other thing I also wanted to talk about is when it comes to India, both derma as well as your respiratory segments did not perform all that well. Tell me what the revenue trajectory is looking like, and whether that was also an aberration, you think, in the quarter gone by.
Yeah, if you really look at it, the first half as well, especially the second quarter, there was definitely a slowdown in respiratory and derma. And this is across the industry. If you look at it, the acute business did have a slowdown because of the slower onset of the monsoon. And obviously, we have now looked at the quarter 3. When we look at the secondary, there is improvement in the respiratory side. Also, in our case, if you look at it, last year we had some divestment of non-core brands as well as the NLEM impact. So I think we are looking at an improved quarter 3 and a quarter 4.
Okay, you're looking at an improved quarter 3 and quarter 4. And I was just going through your launch pipeline as well. You filed, I think, quite a few ANDAs in the first half of the year itself. And for the full year, you're expecting almost 10 more. Could you give me the details in terms of what the launch pipeline is going to be like?
So actually, as I just said, we in-license this product Verniclean, which we have a tie-up with Mankind that we have just launched, so that should do well. We also have some of the injectable products like octreotide and phosphonatoin. So some of these products we already have launched. So I think, as you rightly said, there are 10 more products to be sort of filed, and we should definitely see many of the launches also in the second half of the year. So I think that gives us the confidence to say that we could go back to closer to 100 million turnover in the next 2 quarters.
Please help me recall this deal that you had made with Nirma, divesting your stake in the life sciences business. Has it already consummated? What is the timeline of getting the money in, etc.?
So we have, the transaction is signed, and obviously it's a binding contract, but we are expecting that to be consummated somewhere in this quarter, and money should come somewhere later this quarter or the early part of the next quarter. So there are a couple of regulatory approvals still expected. So I think in the next 3 months or so, we should see this transaction completed.
Money will be used to pay down debt, right? Or is there any other use as well in terms of capex or anything else lined up?
No, we are going to use all these funds to pay down the debt. That's what we have told even in our earlier filings as well as calls. So I think we'll stick to that. So we would use these funds entirely to pay down the debt. Okay. And
the debt then look like by the end of the year?
If suppose whenever we get the money, immediately after that we'll use it to do that. So if it happens by end of this year, great. Otherwise, Jan or whatever, whenever it comes through, immediately we look to pay down our debt.
Okay.
As you know, the interest rates are also high. So obviously, when we do all this, it should also lead to an improvement in our PAT as well. We are looking at coming year our PAT to be improved because of lower interest and as well as depreciation and taxes.
Okay, thanks for such a candid chat. We get a clear picture on what to expect really from Glenmark Pharma going forward. Good speaking with you, Mr. Mani.
Thank you so much.
Recovered quite a bit of lost ground. It's actually after a bit of a wobbly start. The stock is stabilized, gaining ground by about almost 1.5% right now. But lots more earnings to dissect. Let's welcome on board VP Nandkumar, the MD and CEO at Manappuram Finance, as well, joining in on the show right now. Mr. Nandkumar, great to have you on the show. Thanks for taking the time out. Your gold loan AUMs have seen an 8% growth in the second quarter. You've maintained that you're going to be maintaining the pricing discipline as well. How do you think this strategy is going to fare with regards to growth, especially given the competition now in gold loans?
The gold loan, our expectation is to grow around 10% annually, and we expect that to grow because we are the coming quarters are usually better for gold loan. And now, more importantly, we have other portfolios too, secured portfolios. We are growing those portfolios along with our gold loan portfolio, like MSME, secured MSME, commercial vehicles, etc. Because we have a very large customer base, both in Manappuram and the subsidiaries. So in these secured segments like commercial vehicles as well as secured MSME, our penetration compared to our potential has come to only 1/5. So we have that opportunity also along with the gold. Gold, as I said, we expect the coming quarters we will have the targeted growth of annual growth of around 10%.
Morning, and you've also been able to pass on the higher cost of borrowings, unlike what some of your peers have managed to do, who had to shed yields. So keeping in mind the kind of competition that we're seeing in the space, what is the outlook in terms of where you see your spreads headed?
In gold loan segment, there are many players, but the segment we are into, that is small ticket size. Average ticket size is around 50,000. And short-term loans in the sense that the average loan period is around 100 days. In this segment, what is most sought after is the quick delivery of service and also the service at the doorsteps wherever required. In these areas, there is enough headroom for us to play. So the competition is there in different segments of gold loan. These segments, we feel like we have a lot of role to play.
What is your outlook then on growth in the gold loan and the non-gold business?
Our target is to grow at a rate of 20% annually and deliver an ROE of 20%. We are going in that path. So we are on the track only. We have no issue there.
I also wanted to talk about your subsidiary, the Asirvad MFI, for the IPO, because that was the plan. The DRHP was filed a month ago, almost a 1,500 crore IPO is what was planned. Could you talk to us about what are the timelines in terms of when it will be out in the market and what kind of value unlocking can happen for Manappuram?
See, I am prevented because of talking further on this as we have filed the DRHP. Because whatever has been what we can disclose is whatever has been already disclosed. Other than that, I have the constraints. But what I can say is, we have, as told by you, that we have filed the DRHP around 1 month back. And we are getting a few queries which has been promptly answered. Usually, from the market, what we understand is the time usually taken is around 100 days. So we expect that to be cleared within 100 and 120 days. But but at the same time, I can only say that the decision is with ZB only. This is whatever I have said is our expectation.
Sure, we appreciate that you can't talk because of the regulatory requirements much about it, but just let's talk about the asset quality as a whole. RBI seem to have raised a red flag when it comes to the unsecured loan for the book of Asirvad and for yourself as well. What kind of asset trends are you witnessing? Anything that should be a concern?
RBI has not raised any flag. So our asset quality, post-COVID, the asset quality remains good only, healthy only. Compared to peers, the asset quality is not at all worse than the peers. It remains strong only.
What I meant when I said RBI raised a red flag is for the entire sector, wherein RBI was a bit worried about the unsecured lending. And they have been talking about improving the entire norms, etc. So that was my point. But Mr. Thank you so much for joining us and talking to us. Those were largely the questions I had in mind. Appreciate you joining us on the show today. Mr. Nandakumar, good to have you. In the meantime, let's take a look at the other stocks as well. One stock that deserves mention is Protean. That stock had listed just on Monday. With a stock price of around sub 800 rupees. Since then, it's managed to gain quite a bit of traction. It's now close to 1200 rupees, sitting with a gain of 15% yet again. Let's pull up the 5-day chart or whatever the history we have of this stock, because it listed around that 790 mark, was a very, very subdued listing. And since then, it's seen a massive run up. Within 3 days itself, it's up around 40%. So that was one of the stocks. The other one was Electronic Smart India, which is higher by around 7%. And RR Kabel, which saw the initiation coming in from Axis Capital yesterday, is seeing a bit of reaction today. So that's the other stock. But talking about Protean, we did get an opportunity to probe the management about the future prospect of the company. Listen in to what Mr. Suresh Sethi, the MD and CEO of the company, had to say.
We are expanding into new areas. Our first area of expansion is in the space of open digital ecosystems. This is largely leveraging on the underpinnings of the government policy framework, where the government is looking at national open digital ecosystems being created in multiple sectors. We are today having interventions and ODEs which are supported by the company at an infrastructure level in the space of digital commerce, mobility, health, agriculture and education, which takes us from our strong points of the BFSI sector but gets into multiple sectors for us. Similarly, on the ID services side, we are looking at a vertical integration, which is our second business foray, to build a complete digital onboarding and data allied services business, where we are also going to be leveraging our account aggregator license, which we received from the Reserve Bank of India. And third, we are looking at building a business on cloud services and InfoSec consulting. So we move from a 3 vertical to a 6 vertical business. The intent also is to take this entire unique combination of DPIs to global markets, especially to developing countries which are at a similar stage where maybe India was a decade ago.
All right, 19,700 on the screen, and what's leading the way this morning includes a lot of the heavyweights. You've got support coming in from the likes of an NTPC, BPCL, Hero Moto and ONGC. But let's find out what are some of the chartbuster ideas that our technical guests are looking at. Nooresh Mirani and Kunal Bothra right back with us. And Kunal, you're picking out one of the heavyweights that is really leading again today, and that run us through your top pick.
Well, yes, that's Titan, and how the charts are poised at a sort of a breakout. It's not a breakout of a major downtrend, but it's a breakout of consolidation which is happening for Titan. So as you can see over the last few months, the stock has been going through this grind, or in terms of a range over here, 3,250, 3,300 as the higher point of the range, and close to 3,000 is where the stock has taken twice support. So which means that these are the strong support zones for the stock which has been marked, and this is the stock in terms of resistance. Now it's heading towards a breakout of the resistance. What's aiding the charts in terms of a potential breakout is the movement in terms of indicators. Now as you can see, when stochastic indicator gets into a breakout mode, the last time when we'd seen the stock coming out of a previous kind of a resistance, we saw the stock starting a strong uptrend for itself. So what could aid the breakout this time around yet again for Titan is this potential breakout in terms of indicators. So I believe from here on we can expect a steady up move provided the stock breaks past about this 3,300 odd barrier for itself, and we can expect at least a modest 300 to 350 point rally for the stock over the near term.
Right. Okay, Nooresh, what's the chart buster on your radar? Nooresh, you're on mute.
Yeah, that's a chart for Hero MotoCorp. 2950, 3000 was a resistance for the last 1.5 year. Gave a breakout, went up to 3250. A bulk of news around it. The stock came back to 2950, again came back to 3250. This time around, the higher bottom at 3050 and a classical triangle formation, which has given a breakout today above that 3200 mark. So that's a confirmation of a short-term breakout done. And now it can head up all the way to 3,600, 3,800. I would expect it to hit a new all-time high. And the whole auto pack has been doing well. The last one to catch up should be Hero MotoCorp. Good risk reward here. A buy at current levels as well as on dips. Stop loss at 3,100, target price of 3,600 to 3,800.
Okay, that's Hero Moto, one of the smart movers in trade today. Let's find out what are the individual stocks as well that our chartists are picking out for the day. Kunal, what's on your radar?
So Tata Power is the first stock which I would suggest as a buy. The stock is heading towards a breakout about 260 mark. So with a target of 275, keep a stop loss of 255 for the stock. And second would be a buy on Hero MotoCorp. Again, a swing breakout as well as a flag pattern breakout in the daily charts. 3,300 as a potential target over the near term. Stop loss at 3,180.
All right, Tata Power and Hero MotoCorp, that makes a mention yet again. Let's find out Nooresh's top ideas. Nooresh?
First is a buy on Concor, setting up for a breakout. Stop loss at 745, target price of 800. Second is a buy on Federal Bank around the breakout area. Good risk reward. Stop loss at 147, target price of 165.
All right, time for a quick break right here on the show. Be right back. We've got lots more market talk coming up.